Again, thank you for joining me on this daily market analysis. We had the US CPI release yesterday or last night. We saw big moves right across the board. It didn't last very long. So let's talk about it today. If you're on the session, do remember to drop a message and say hi. Let me know where you're joining us from. And for all the regulars, a big welcome back. Hey Jimmy, how you doing? And you can help me out massively by remembering to click on that like and subscribe button. Jimmy caught 230 pips on the US yen. Very nice. I'm surprised you're still on the stream, Jimmy. Should be having a good Friday, long weekend. Casting the line out and catching good fish. You caught a good one on US yen, going to catch some fish as well. All right. Anyone else? If you were trading yesterday, you got your profits, you got your numbers, do put it into the chat and let us know. Maron has been following on TradingView and you like analysis. Welcome to the session, Maron. Good to have you with me. Glad to have you here. If you haven't already, do make sure that you join us on the Discord channel. I'm just about to put the link up. The Discord channel is there, so you can also join us on Discord. Take our conversations beyond this session into Discord. I mean, I'm streaming live through the day anyway, so you can chat to me. There's so many ways to reach out to me. You can chat to me live on YouTube. You can chat with me on Discord. You can leave comments. You can ask questions. You can share your trades. Do something. But make sure you click that like and subscribe button. Okay, with that, I ramble on for a little bit too long. Let's get started. A quick disclaimer: any information contained on this webinar should not be construed as advice and is presented as educational material only. Please remember that the contents of this webinar are not intended to be a recommendation to a financial product, as your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. Hey Naren, how are you doing? What a wild day it was yesterday. I truly agree with that. It was wild, but it was wild in the right direction. We were spot on with the way the market moved, so I was very happy with that. Even the BoJ became momentum trader. I think that was what you would call momentum trader. I guess momentum plus the opportunistic trader as well, right? Taking the chance to sell it down as it was heading lower. Sell it lower as it was heading down. Erwin's been waiting all morning for that disclaimer. I want to see how quickly can I get through that disclaimer. I'm going to put a timer on how quickly I'll read that next time. Okay, so as we were talking, or as I have been rambling, what has happened since the last time we spoke? A whole bunch. A lot has happened, only based on this one number, well, this key number, where yesterday at 8:30 p.m. GMT plus 8, we saw the US CPI year-on-year being released. It was 3.3%. There was an expectation that it was going to get released at 3.1%. During yesterday's live stream, I was anticipating 2.9 or maybe 3. It got released at 3, right? So very happy with that release. On the US CPI, firstly, as it released at 3%, that's firstly indicating the slowdown in inflation growth or disinflation in the US, which is adding on to that. You can see how excited I am talking about inflation and disinflation in the US, right? We're not looking at a change. There is a small change in that's a bit odd, right? In the rate cut decision, right? It's increased slightly. It was 5.2, now up to 6.7 in July, end of July, but it seems like it's changed more significantly here on the September decision. And I'm super happy about this. I'm looking forward to this. I've been looking forward to this since the start of the year. I thought it was going to happen in April. In April, it didn't happen. Push back, June didn't happen. It looks like with a 3.0 inflation data released from yesterday, you see that the rate cut decision for the FOMC has gone from a 69.7% chance up to an 86.4% chance that they could cut rates in or on the 18th of September during the meeting. Right? Overall, a 92.5% chance for a rate cut in September. That's the big thing. It was, before this news, last night, it was pretty much thinking November, December. There was one rate cut scenario. Now, with this, it looks like there might be a 2 rate cut scenario, but let's deal with the first one. We're looking forward to the 18th of September. Okay, so that's what we're looking out for, and that's why this 3.0 is such a crucial number. It's put that rate cut decision firmly on the table for the Fed Reserve. Now, with that said, what we saw on the charts, I've got a super messy chart here, hang on. Right, what we saw on the charts was the dollar index moving as expected, spiking down 104.80, straight down pretty much to 104 round number support level. If you were on the Discord channel, I was telling you guys it's heading down, but watch out for that 104 support level. The tendency for a lot of traders would be to have seen that drop, right? Would have seen that drop and think that it was going to continue down and break that support. It dropped right down to the support, and as we said yesterday, it was going to come down to that support area and bounce back up again. And it's moved exactly as how I've drawn the arrows. It's come right down, it's come right back up to pretty much that same level where my arrow ended, which is 61.8, between the 50 and 61.8 area of retracement area of that move. Okay, so move down on release of the news. It was outside of the Bollinger, it stayed outside of the Bollinger at 9 o'clock, at 10 o'clock it came right back in. So that was what happened with that CPI news, with the dollar index pushing down to the support and bouncing right back up. Now it's sitting right in the middle there, and you can see that, let me see, we don't need a few of those levels, but I'll clean it up later. You'll see that it's sitting right there after it came down and bounced back up. Thank you, Maron. I really appreciate that. That was, I always say I get lucky with that. Lucky guess on the 3.0 and how it's dropped and bounced, right? So that's done. That's moved, it's done. It's sitting at this 104.50 level. The next step is to try and figure out whether it's going to retrace back all the way or continue lower again. I'll tell you that shortly. Take that away. Now, what else has happened while this news, I mean, we were talking about it already, while this news for the US happened, as the dollar dropped, right? I had my Aussie dollar, which I got in. Haida would know that. Bought it up, it shot up, hit close out of my trade. Dollar weakened right across the board. We saw the Kiwi pushing up because of dollar weakness, coming back down because of that retrace. Same thing on the Aussie. Same thing on the pound. It shot up, I closed out my trade there. The euro shot up, I did close out because it's outside of the Bollinger. So once it gets outside and it stays out there for a while, I know the next move is going to come back in. I got out. And also you see that the MACD starts crossing down. My fast MACD starts crossing back down. You know that the move is almost at the end. time to get out of the trade. So that's going to be crucial. If you want that MACD, again, remember, drop me a message on Discord or on TradingView, and I'll send you a 1-month trial of that. So got off the euro as well. I didn't trade the Swiss franc. The US CAD, I was very keen as it was pushing down, thinking that I was out of the pound, I was out of the euro, I was out of the Aussie, I was neutral. Could I get onto the US CAD? Didn't happen. It came down to the support and it bounced back up. I did not catch 230 on the yen like Jimmy, right? I didn't catch 230 on the yen. I had my order there, or not my order, my trade there. I did catch that 120 to the downside on the yen as it came down to, I don't know why it says resistance, find that support. As it was pushing down, I guess the BoJ decided to take advantage of the move, right? And like I have been telling you, the BoJ is not going to intervene with nothing else happening. They've done that, they've tried that, they've done that. It doesn't work. It shoots down and it goes right back up again. So they took advantage of that. As the dollar weakened, they continued beating into the yen, strengthening the yen while the dollar is weak. It went from 161.50 within the hour, went down to 158. Almost 158.50, and then within 2 hours came as low as 157.40. That was a good 400 pip move in 2 hours on the US yen from the Bank of Japan. Yes, Ministry of Finance, Minister of Finance Suzuki did say that they didn't intervene. They have no comments about intervention, but it is said that they have intervened it doesn't move from 161.50 down to 157.50, 400 pip move in 2 hours without an intervention. All right, so it's happened. It came down, but it's bounced back up. It tested the support again. It looks like it's pushing back up again. Okay. US yen was crazy, pound yen as well. I didn't even look at the cross pairs. Pound yen, from the look of this, is crazy down within 2 hours, 400 pips as well. I think euro yen will probably be something similar within 2 hours, 300, almost 400 pips to the downside. So everything dropped about 400 pips on the yen crosses. You can't say that it's not an intervention. It's not our first day in the markets. Come on. Right. So with that said, that was what happened. That was what happened last night. US CPI data release. Dollar weakened right across the board. BoJ intervened on the yen from what we can see, right? Take profit hit on the Aussie dollar, trade closed on the pound, trade closed on the euro, trade closed on the yen. How did you do through yesterday's trading? Put it into the chat and let me know. Good morning, Nwachuku. How are you doing? It is Friday as well. So with that, what do we have for the rest of the day? Is later tonight at 8:30 p.m. GMT +8, we have the US PPI. So we have CPI, Consumer Price Index. Later today at 8:30, we have the PPI, which is Producer Price Index, another component of inflation. And this time you see that PPI month to month looking to go from a minus 0.2% to a positive 0.1. Small swing back up. I don't think it's going to factor too much. Core PPI from a 0 to 0.2. Again, a small swing upwards. I don't think it's going to do too much. But after a big move through the week, end of the week, Friday, it does feel like you have to be extra careful. It might be a retracement day. before continuation. I'll tell you more about that when we look at the charts. Now, with all that said, what could happen into next week, or what to look out for next week? Monday, Japan is on a holiday. What are they doing? Marine Day, okay. Not much on Monday. Chair Powell speaking on Tuesday at the Economic Club. You're going to watch that. He does sometimes tend to leave comments there, especially after the CPI data. On Tuesday, we have CPI for the Canadians, retail sales number for the US. We're going to look out for that. On Wednesday, CPI for the Kiwis, CPI for the UK. And then on Thursday, interest rate decision to come for the ECB and a press conference, follow on with Friday's core retail sales and retail sales number for the UK and the Canadians. So quite a number of things to look out for again into next week. Not super major like what we had for yesterday, but I think it's still going to give us good opportunities, especially after the CPI that we saw yesterday. Okay, Maron's asking, can you tell us more about the PPI effect compared to CPI effect to the markets? It is going to have some level of impact, right? Because it is a change in price, the inflation of finished goods and services sold by producers. It's a leading indicator of consumer inflation, again, right? But I don't think it's going to have as massive a number, an impact as the CPI from yesterday, especially without a big swing in that. Okay, so I'm thinking a bit of a retrace, a little bit of a slight correction, but overall can't deny the idea, not a confirmation, but the idea that the Fed could or more likely to cut rates in September because of yesterday's CPI number. Okay, so now when we look at the charts here, we took that, you see from this move down, it's retraced back to that 23.6 level. If that's broken, we don't need that. Take that away. This move down. Done with that. Okay. Now I'm looking at this. Don't need a couple of these lines. Right. That's a round number here at 105. If I look at that level here, that's probably my 38.2 exactly. Okay, so that's my resistance level here. And I'm looking at this next point up there. I'm actually looking at that point there. All right, okay, so we have those levels identified. I think that's a better resistance area. And then that's a level to look out for. Right about there. Okay. There we have it. Those are the areas to look out for. That's what I'll be watching out for. Zoom in a little bit. There we go. In positive manner to the dollar or short-term, long-term. Okay. I think that, so what you mean is how's the PPI? If we see that PPI right now at minus 0.2, expected 0.1. If it gets, for example, if it gets released at a 0.5, right, a big increase, then we're likely to see the dollar push back up because we're showing that inflation for the producers is increasing. Right now they want inflation or they want disinflation, so they want it to come back down. So if we come out at 0.5, it's going to kind of reduce the chance for a rate cut scenario. And if rates stay higher, then we're going to see the dollar strengthen. If it comes out, it's now at minus 0.2. If it comes out, for example, at minus 0.4, right, with an expectation of 0.1, it comes out at minus 0.4, then inflation slowing down even more significantly, more likelihood for rate cut scenario to come earlier, rate cuts, lower interest rates, less demand, dollar to weaken further. Okay? Hope that answers your question there, Maron. Hey Lydia, how are you doing? All right, so now with that, dollar index is sitting right along this point. Okay, there we go. 23.6 and at 61.8 area. Now, no worries, absolutely. Glad you're asking that question. 12th of July, consolidating at 104.50. Right now, consolidating at 104.50, sitting in that area. Okay, needs to stay below 480 to remain bearish, with key support at 104, round number. There we go. Okay. Yep. Okay, there we go. That's what I'm looking for. I'll draw it out as well. So what I'm looking at in this case is the dollar consolidating along this area. It could retrace further. Needs to stay below 104.80, but overall we're looking for it to turn back down to remain bearish. Ideally, it might sit there and push down towards support. Oops. It might push down towards the support, or if it retraces and stays below that resistance area, then we could after that see that push back down with that support to remain bearish and push down towards that support. Okay, so that's what I'm looking out for on the dollar index. There. I don't understand why the NASDAQ crashed even though the inflation was good. Inflation was, well, was good. So it was not really good. It was more like in alignment or as bit better than expected. So shouldn't have meant more probability for rate cut. I think I don't really check the, I don't really follow the NASDAQ or the indices too much, but what you're going to see is it's going to play out a little bit. It's going to take a little bit longer to play out, like, you know, for the US 30. All right, this was yesterday. We saw it push up. We saw this drop later on. I don't actually know why. You're right, it should be going up, but I don't actually know why that dropped. You can see on the news it popped up and then after that it came right back down. I'm pretty sure there's a very good reason for it. I just don't know it off the top of my head. Let me check it, read into it a little bit more. Make sure you're on the Discord channel. Ask me the question again. I'll give you the answer. Okay? Not off the top of my head. I can't figure out why at this point. So that's $1. Okay, I'm happy with that. Now, dollar consolidating, you see that the Kiwi dollar pushed down, came back up to that 61.2 level, right? And held there. Sitting right across. Yeah, that didn't trigger. We were thinking of that as a dollar strength scenario. It didn't trigger. I don't even think it's worth highlighting this. Take that away. I'm still looking for that. I am thinking that the dollar, the Kiwi dollar, I'm actually looking at this consolidating. I'm thinking that it's going to consolidate and maybe push back up a little bit before turning back down. I think that's a little bit more likely scenario, even if it was very briefly up a little bit before turning back down. So I'm actually thinking that it sits there. Whether the Kiwi dollar is going to come back in before pushing back up again. All right, holding this support, this slightly bullish trend line. If you're looking for this, a bounce off 6-1, stop loss 20, take profit 50 to the upside. Okay, that's what I'm looking out for. I think you can even go a little bit earlier. Oh, it's not that much earlier. I would say 6-1. Okay, so I'll keep that. And I'll be looking at Kiwi to buy at 0.61, stop loss 20, take profit 50 to the upside. 0.61, 20 to 50, looking for it to bounce. Yep, I'm happy with that. Then on to the Aussie. So I got out at about 35 on the Aussie. I was looking for it to break above 0.68 before I would look for that further upside. Didn't happen, right? So it popped up outside of the Bollinger, very much outside of the Bollinger. So I closed out of that trade. That's done. Take that away. Now, as that consolidation is done, take all that away. It's still pushing up. You're going to have to wait to see if that's going to retrace back down. Right, it's sitting at that 23.6 level. We don't need that anymore. And take that one away for now. Okay. So what we have here at this point will be something like that. It's a good resistance level at 0.68. Again, consolidating wouldn't do anything. anticipating that dollar weakness to continue, that the dollar is going to continue pushing down, right? That the dollar is going to push down. We're looking for this to sit at this point, push back up, break above that resistance, then look to get in 6810, stop loss 20, take profit 60 towards the next resistance level. Okay, consolidate and then break to the upside on dollar weakness. So 6810, 6810, stop loss 20, take profit 60 to the upside. Hesitation at 68. That played out exactly as we had anticipated. So it's going to break above 68, then you look to get in. US yen is going to be the funny and interesting one. It's pushing back up now. It's pushing back up despite the dollar sitting right there showing. Dollar hasn't moved, is it? I just want to make sure that it's still alive. Yeah, still alive. It's just sitting at that price for so long. I'm just wondering what's happening. Well, the dollar is sitting there, but yet the yen is pushing back up. All right, yen is pushing back up. So now you're looking at this. That's a good resistance. We don't need, well, we don't need all of that. And those points too. Okay, so it shot down to that 61.8 level. Right, here we have it. This move up, 61.8 is right there. By no coincidence, it came right down from that high to find support at about that 61.8 level. Now, you want to see, so if we took this overall move, all right, you want to see that. Okay, so one thing I also highlighted here, I forgot to tell you, is this happened. The last known intervention from the BoJ was in April, where it hit that 159 level. We saw a 400 pip drop to the downside. It retraced right back up to about that 61.8 level. And then on the 2nd of May, we saw another possible intervention from the BoJ with 450 pips drop within 2 hours to the downside. So that's why I say that after what we saw this time from the BoJ, it does look like, not a confirmation, but it looks like there might be a bit more of a possibility that there will be another one to come from the BoJ. So what we're looking for, again, that 61.8 level, we're looking for the yen to push back up towards that 61.8 level at about that 160 point to sit there, and then we're looking for a possible rejection back down. But I think for today, the yen looks like it might just take some time again. Okay, so US yen, we're looking at waiting for, rather look for reaction at 160, right? Possible intervention to from BoJ. Possible second intervention level from the BoJ. There we go. right? So from there, what you would probably be looking out for, I don't think it would be today, would be 159.60 tight stop at maybe 40 pips. You're looking for 1 is to 10. You're looking for that 400 pip move to the downside, about there, towards that point, right? So you're looking at a 1 is to 10 risk to reward to the downside there on the yen, if the BoJ does intervene. This morning, BoJ intervened in euro yen. I'm not sure. It's not a huge. It's 173. I might not be a intervention, so to say. It might just be that whole profit taking kind of thing. Not entirely sure that would be an intervention. Okay. Oh, okay. Yeah, so quite possibly they did. It would be a bit odd. No, actually, that's happened on the yen as well. Actually, now that you pointed out, it's not just the euro yen. It happened on the US yen at 7 as well. A small one. It's a bit odd for that small move, relatively small move. That's good 170 as well. Yeah, I think there'll be it's like a earthquake and then the tremor. So that's the earthquake and then the tremor and then maybe the second one coming. All right, so I would say we'll look out for that. Then onto the pound, we were expecting that push to the upside. That's still running. Holding, that's good. I don't actually think there's going to be a lot of movements today. Like I was saying, it looks a bit like a consolidation, retracement consolidation day. That's my support. I feel that took that up there. I would like, as much as it's sitting in that area, I would like to see it retest to that support before bouncing off. Right? I'm not sure whether it would, I don't like trying to guess where the retracement is going to take. Or how deep is it going to retrace before it bounces? I think you all know I hate that guesstimate there. So about 1.2890, stop loss about 40 pips, no, 1.2880. Stop loss about 30, take profit back up to 110. I don't see that happening today. Back up to the previous high at 60 maybe. It's either going to sit there and bounce or it's going to just push up. I feel that if you look at that, that's crossing over. That's showing a bit of a crossover. What you might want to do is, if you look for this, just to break above that previous high, 1.2940, stop loss 40 pips. It's not the best place to have a stop. I'm only looking at this because of that previous high, right? And then you're looking at it to trade up. There's a lot of space up there. Right, you have this point could be looking at that level here. So again, what that means is $1.2940, 40 to 90 to the upside. Let's go with that. And I'm thinking of that because of a possible crossover on the TSRI MACD. So we'll look for that. Pound, dollar, we're looking to buy at 1.2940. Stop loss 40, take profit 90 to the upside. 40, take profit 90 to the upside. Alrighty. Yeah, Hyder, exactly. MAC is about to cross. So that's why I'm just thinking might not retrace, might just push up past that previous high, close of the candle, could be looking to buy it up. Then onto the euro, same thing. If you haven't got into that, or if you didn't get into that, then now at this point, we're not looking for that. It does need to trade up to that resistance level, but before that, we have that 23 holding. Take that whole move. That's more realistic. Don't need that. Don't need that for now. Actually, I'll just keep that there. All right, so what I'm looking at here on the euro, I think that if you want to rush into a trade, you have that on the pound. I think that the euro, you might not want to get in with that resistance quite near. All right, and we've seen it reject at this point. I think that you still want to see what happens as it pushes up towards that 1.00920 level. And that's what we'll do. So euro will be to look for reaction at 1.0920. Nothing for now. US Swiss franc bounced around, shot down. Is it going to push back up? We don't know. It's sitting right there. Right, that doesn't work anymore. It's sitting there. It's showing some push. 61 was working better from this point. I wouldn't do anything. To be absolutely straightforward, US Swiss franc. In a normal day, it doesn't even interest me that much. Right now, given that it's in between, right in the middle of that support and resistance level, wouldn't be too keen on it. I think what you do is look for it to possibly come down to react at that 0.89 level. I don't think, despite the PPI released today, we're not expecting a big change in the data, not expecting a big move. I'm not looking for many trades for today. All right, so this one we're looking for reaction at 0.89. Yep. Then onto the uscad. Was looking to sell it down, didn't come down to trigger my trade. We were looking for reaction at 1.36. We've seen that reaction at 1.36 where it's come down and bounced off that point. I think this would be a place where you look at the possibility of a dollar recovery in strength. If we're entirely wrong about the dollar, seems a bit unlikely at the current price action. If we're entirely wrong about the dollar and it pushes right up, then maybe the dollar index could break the US CAD and bring it higher. Right, we could look at that big push to the upside. So you're looking for that. If the dollar does regain massively in strength, 1.3660 stop loss would be about 20 pips. Take profit, you're looking for a big recovery back up. Apart from that, I think it's going to stay within that range of 1.36 to 1.3650. Okay, so US CAD, I think, I don't know, is there any news today? CAD building permits, not too keen. Yeah, also because it's the end of the week, I don't think it's going to, after the big moves, I think CAD for now, maybe CPI next week could cause that big push back up, but I think for now, likely to range between 1.36 and 1.3650. Okay. Hyder says also like an ugly inverted head and shoulder. I see it. I know what you mean. There is a shoulder, head, and shoulder. Shoulder, head, and shoulder. If it breaks up past that point, we could see it push up higher. I think it's going to stay in this range. I think it's going to stay in that range. Okay, then on to gold. Moved like a charm. We said yesterday, weakness, drive go higher, break 23.90 to test 24.15. It broke 23.90. It went up to 24.17, 24.20, and then came right back down, retraced. So that's worked out very nicely. I was too busy on the other pairs, didn't trade gold. Right now, sitting at 24.04. Right there, let me see. At this point, all right, we don't need that trend line anymore. We can take that away. That's now a nice support level. All right, and that's pretty much done, so we can take that one away as well. So now that it's sitting right there, what you could be looking out for is that if it sits there, dollar weakness to push it back up, only if it breaks 24.20, we might see 24.50. Like that, okay? So dollar index weakness, yes, but we're looking for it on gold. Needs to break 24.20 to trade up to 24.50. Needs to break 24.20 to trade up to 24.50. There we go. Okay, there we have it. I don't think today would be a day that you rush into a lot of trades. I think there will be opportunities if you do keep an eye on it quite closely. But it might be a day of sitting around, waiting, looking at that retracement, thinking that you could get into a trade, but nothing much happens. Then you wait till next week. There's always next week. Don't feel like you have to rush into a trade, especially if it's not moving to what we want to or breaking any key significant levels. Please remember, trade well, trade safe, have a fantastic weekend ahead. I will see you all on the live stream right after this. Well, I'll continue chatting with you on the live stream right after this. And if not, then we'll catch up on Discord and onto the live stream next week as well. Okay, so take care now, and I'll catch up with you again.